Hi, good morning everyone. Welcome back to my channel, the accounting tutorial video, and this time I'm going to discuss here about the partnership dissolution, admission by investment. But before anything else, let me have a review regarding the last video that I posted in the site that pertains the purchase of interest. Please remember that in that transaction, that is a personal transaction between the selling partner and the buying partner. Therefore, there will be no changes in the total assets nor in the total partnership's capital. Why? Because the only entry needed in the books of the partnership is to record the transfer of capital from the selling partner to the buying partner, which is that differ to this concept, the admission by investment, because this admission by investment is a transaction between the original partnership and with the new partner or partners. Okay, therefore we can expect that there will be an increase in the total assets and the total partnership's capital in this transaction. And the entry to record admission of new partners depends on the capital credit of the partner's account. But before I am going to present to you different scenarios to best explain this concept, okay, let us going to define these terms. We have the agreed capital or AC, the total contributed capital, TCC, bonus, and the asset revaluation. What is an agreed capital? Agreed, as if being agreed or set by the old partners and the new partner. Okay, so that is the amount of new capital set by the partners, which might be equal, more than, or less than the total contributed capital of the partners. Okay, and we have other terms used in lieu of the agreed capital. We have the new firm capital, total capital, or the agreed capitalization. What if the problem doesn't state the agreed capital? What we're going to do? We have two methods or ways to compute if AC or agreed capital is not given. First, using the investment of the new partner, or second, using the contributions or investment of all partners. Let us have this problem. We have Annie and Bing, are partners with capital balances of 300 each, and John D invests. So invest, that means John D is our new partner. How much is the investment of the new partner? 200,000 for a 2/5 interest in the new partnership. What is the agreed capital of the partnership using the first method? Using the investment of new partner, which is 200,000, divided by the new partner's fraction of interest, which is 2/5. Therefore, the AC is 500,000. That is for method number 1. For method number 2, using the investment of all partners, that is 300 each, so that is 600, and the fraction of interest is 3/5. How we get the 3/5? That is 5/5 minus 2/5, that will give us 3/5. So we get AC of 1 million pesos. Okay? So that is if the AC is not given in the problem. What is the total contributed capital? That is the sum of the contributions or investment of all partners plus the contribution or investment of new partner, that will give rise our TCC, or the total is that we can derive is what we call the total contributed capital. For example, in that our problem, okay, so the total investment of all partners is 600, investment of new partner is 200, the TCC is 800,000. So that is how to compute the total contributed capital. Again, that is the sum of the investment of old partners and the investment of new partner. What is the bonus? That is a transfer of capital from one partner to another, which might be bonus to old partner or bonus to the new partner. How to determine that one? All we have to do is to compare the contributed capital of the new partner with the capital credit of the new partner. How to compute the capital credit of new partner? We simply multiply the agreed capital with the fraction of interest of the new partner. Okay? So what is the asset revaluation? Asset revaluation is a necessary adjustment in asset values upon admission. Generally, that will have a result or impact to the capital account of the old partners. All we have to do is to compare the agreed capital with the total contributed capital. For example, in our given problem, the TCC is 800,000, and previously we computed here, we take this number 2, we have 1 million AC, therefore we have a difference of 200,000. AC of 1 million less the TCC of 800,000, we have a difference of 200,000. That is a positive revaluation. Again, revaluation is the result of the difference between the TCC and the TAC. Okay, if TAC is greater than the TCC, therefore we can have the positive asset revaluation. But if the case is that, for example, AC is 500,000 and our TCC is 800,000, we have a difference of 300 and TAC is lesser than the TCC, therefore we have a negative asset revaluation. I hope you understand now what is an asset revaluation. Again, that is the difference between the TAC and with the TCC. Okay, so that is our asset revaluation. Okay, so let us have the problem. Let us take this case 1 wherein there is no bonus, no asset revaluation. If that would be the case, TCC is equal to our TAC. Let us have this problem. James and Jules are partners with capital balances of 400 and 200 respectively. They share profits equally and John D is the new partner by investing 200,000 for a 1/4 interest in the agreed capital of 800,000. There's no problem in this case because AC is given, which is 800,000. All we have to do is to write the name of the partners in this column and we write the word TCC and we're going to write the TAC. Okay, TCC, how much is for James? That is 400,000. And for Jules, we have 200,000. Okay, and for John D, that is 200,000. Okay, therefore our total would be 400 plus 200 plus 200, or that is 800,000 pesos. Is the agreed capital given in the problem? The answer is yes. So that is 800. So write 800 in the bottom part under the column of TAC. Okay, that is 800,000. Now we're going to determine the capital credit of the new partner. So to compute that one, okay, TAC times fraction of interest of the partner. So that the answer would be, okay, the TAC is 800,000 times 1/4. That will give us how much? That will give us 200,000. So the capital credit of new partner is 200,000. So we're going to write it here under the column of TAC, 200,000 pesos. So what can you observe in this data? In this written data here in our table? Okay, capital contribution of John D, the new partner, is equal to the capital credit or the agreed capital. Therefore, there is no bonus nor no asset revaluation. Therefore, the capital credit of James and Jules is just the same with their capital contribution. So the entry would be, okay, the entry would be to debit cash the investment of John D 200,000 and we're going to credit John D capital 200,000. That is our entry to record the admission of new partner. Again, no bonus, no asset revaluation because TCC is equal to TAC. And the contribution of the new partner is equal to his capital credit. Okay, now let's have this second illustration. We're in, okay, wherein the problem is bonus to all partners, no asset revaluation. Okay. Again, since this is no asset revaluation, TCC is equal to TAC. Let us read the problem. Same problem except that the fraction of interest of new partner is 1/5. Okay. So the agreed capital is given. So this is our data. Same info under the TCC. In the TAC, I write here the total agreed capital of 800. How we get 160,000? The TAC is 800,000. Total agreed capital times 1/5 interest of the new partner. That will give us 160,000. What can you observe? Okay, agreed capital is lesser than the TCC. Therefore, there is a difference of 40,000 pesos negative. Why? agreed capital is lesser than the TCC. So, since stock is equal to the TCC, no asset revaluation, so we can expect that this amount is 0. Okay? So, we have to term that one, bonus. Okay, that 40,000 will be divided among the old partners based on their profit and loss ratios. Since the share profits equally, therefore, 40,000 divided by 2, that will give them 20,000 each. Okay, therefore, the capital credit of James would be 400 plus 20, that is 420,000. And for Jules, that is 200 plus 20,000, that will give us 220. Okay? And our entry to record the investment and bonus to all partners is this one. Okay, so we are going to debit cash. How much is the investment? That is 200,000. And we're going to credit John D capital, James capital. Okay. And we're going to credit the other partner, Jules. Okay. So, the capital credit of John D is 160. And the capital credit of James capital, or rather the bonus is 20,000. And the bonus for Jules is 20,000. So, that is our entry to record the admission of new partner as well as to record the bonus to the old partners.